Two.
Excellent. And Robert, I don't know. My name is Pamela Van Halsema. I'm with After the Fire. We're a nonprofit that is based in Northern California, in the town of Sonoma, and we came up after fires devastated our area in 2017, and we now are working in multiple states to try to help all the stakeholders involved to navigate the recovery process so that you don't have to start from scratch. Because everyone is learning. Each time there's a wildfire, we're all learning together, and we might as well share that and try to make it a little less strenuous each time, even though the work is very hard. We had a good constructive call with the home builders of Metro Denver in February, when we actually traveled we brought a delegation to the Marshall Fire area, and we actually were going to come to your office, and then there was this crazy storm, and we actually had it via Zoom instead of coming to meet with you in person. But that totally did work, and we recorded the meeting and shared that. And I think out of that, there are some follow-up questions. And Robert, August, I wondered if you wanted to just restate some of the questions that prompted this call before we launch into some of the information sharing.
Thank you. We've had a number of people that are continuing to join. We've had Scott Sinelli jump on and Lauren Brown, who are both builders. And we're really thrilled to have Pamela and her entourage here today. And it'll open up doors. We're also glad that Jake has joined us, who is a new member of our Home Builders Association and has a financial program to coincide and complement after the fire. And so in essence, we're all here for a learning curve. One of the biggest reasons that we're here is that a lot of our builders are concerned about becoming bankers rather than builders. And in essence, one of the big things that we have heard over and over again is that is there continuity between insurance companies and banks in order to process the construction loans more expeditiously? And unfortunately, in our arena, and being a builder over the years, you can have wonderful companies transfer money to your account within 4 or 5 days after an inspection, and you can have companies 30 days to 45 days. And the builders are not prepared to be bankers. They need cash flow in order to operate their business and do their job correctly. So that's one of the main things. Those of you who are coming on board, Jeff and Pamela and another associate were absolutely phenomenal in delivering tremendous information to us. They've also been very, very involved with the town of Superior, and there's an allegiance with Superior, Louisville, and Boulder County as a result of the experience that After the Fire has. For those of you who are not aware, Pamela, you may share some information initially. After the Fire is an outstanding nonprofit that really helps people, consumers, get back on their feet, and also helps builders to relate and understand and cooperate with those consumers, along with the third party, which is the jurisdiction. And trying to ameliorate concerns and mitigate situations as they come up. And we're really blessed to have Pamela and her team today because it's an invaluable resource. And for all the people that I've spoken to, Pamela, all the consumers, they're, as we would say, they're down and out. They don't know who to turn to. And by us putting together a professional organization so that we are now, and have been endorsed by the governor's office, the county of Boulder County, the city of Louisville, and the town of Superior. So by creating this professional network and learning from you and Jonathan Falk, whom we had on our recent call from the National Association of Home Builders Disaster Relief Task Force, this is a perfect match for us to turn the meeting over to you. Steve Erickson, who also co-chairs our Disaster Relief Task Force, is here as an outstanding builder on behalf of Boulder Creek Builders. and is waiting with excitement, enthusiasm as I turn the program back to you, Pamela.
Oh, well, I'm always impressed by your enthusiasm, Robert. It's great. And you're a great leader for this group because honestly, it's hard work for the homeowner. My house burned in the Tubbs fire. Jeff Okrepkie, who's on the call with me, one of my neighbors, his house burned in the Tubbs fire. Together, Jeff started an organization of neighbors called Coffey Strong that I signed on to from the first days. And there's a picture behind me of a frame of a house as it was rising in Coffey Park, largely because our neighborhood came up more quickly than any other because we were willing to really have this collaborative working relationship with the building community, with the public sector, with nonprofits, and it's really essential. And I do hear messaging from fire survivors in Marshall and Superior about, cantankerousness, stress, wanting to fight. And sure, there's a lot of battles to fight, but at the same time, you're only going to make progress if you can step forward and hope and be gracious with one another and try to work on problem solving, because that's how you're going to get these houses built. And so that's what we come with, that kind of message of like, let's see how we can work together, how we can meet the interests and needs of all these different groups and actually make it a safer, better place to live. So what I've done today is answered that call by inviting two very knowledgeable folks from Sonoma County to speak with you. Jeff and I will be available here to answer questions, but I'd like to introduce two people. First, Mike Behler, who is the president of the board of our builders association called the North Coast Builders Exchange, and he's also head of his own construction company. And he has been doing a lot of leadership in this area. He even came and spoke early on at a Coffey Strong event to help us and builders understand some of these financial arrangements that are necessary. And then secondly, I've invited Alison Spitzer, who is currently with the Exchange Bank as the Vice President of Commercial Credit. But she was formerly of Redwood Credit Union and really handled a lot of the transactions of releasing funds. She actually handled the transactions releasing funds for my rebuild at Redwood Credit Union. These are both real local banks who are very involved in supporting the work of bringing our area back after the fire. So she has experience with both banks and firsthand knowledge of that. I'd like to start, if I may, by introducing Mike, and Mike offering you the chance to share information with this group.
Yeah, and maybe it'll ultimately come down to just whatever questions you have. So just a little background, born and raised here in Sonoma County and general contractor, we do mostly commercial stuff. And so right after the fire, we went out and said, we're gonna do a bunch of homes. So we actually started a new entity, Behler Homes, but then we were just too busy with commercial. So we decided that we were just going to volunteer. So 100% of our time was at no cost to fire victims. And my only two conditions were I would not do a full-blown estimate for you and I would not rebuild your home. But I've spent just thousands of hours for hundreds of people, helping them get monies for their code upgrades, doing breakdowns, contract reviews, home inspections, help with billings, you name it. I showed up at a couple, I volunteered at the FEMA Center and showed up with a jackhammer to try to move a rock that he just hated that was left after his house was built. So I will say that the rock won that, and I actually brought a bigger jackhammer and the rock still won. So we have, but through that process, I think I've actually been able, as a builder, I know what some of the issues are dealing with homeowners. I tell homeowners the reason we don't build a lot of homes is, it really sucks working with homeowners, and they laugh, but that's super accurate compared to working with a commercial owner. But I've been seeing it from their side where I see, inadequate contracts that don't reference a set of documents, for example, or don't even have a breakdown. I've seen billings that have been provided that might be a couple pages long, or expectations that they're going to get, that the contractor is going to bill on a weekly basis and have to be paid within 24 hours. And so I've seen a lot from their side, which was kind of problematic. So I think if, not so much, I don't really have a lot of experience with, how well you're getting paid from the lender and or the homeowner. But I think that there's a lot, we actually prepared documents, what you need to know before hiring a contractor, hiring, demolition and building contractors, and went into a lot of, explaining, what should you look for in a contract, what type of contract, what are the options just for design, design build or design and build, the pre-construction process, again, what's in the contract, explaining, and I know you guys have a slightly different lien process there, but understanding what the preliminary notice and lien process is. And, I think Keith Woods, who used to be at the Exchange, said, right now we have 5,000 new developers in our town. And that's kind of what you guys are probably going to be up against, is you got all these homeowners that are now going to be developing their home, and they're not going to know what the hell they're doing. And in some cases, contractors are going to take advantage of them, sometime without really, doing it on purpose. I mean, we ran into a lot of what I saw around here is, contractors coming in, I think with the best intentions, and then seeing that their employees were getting stolen by other contractors because of the need, and therefore their costs were going up because they were going to have to replace their less expensive employees with other employers. And then, obviously with the material shortages and stuff. So that put a lot of pressure on the cost. And I think that burned a lot of the contractors that really, I think, had good intentions for the most part. But, we've even encountered one elderly lady that, the contractor builder pretty much 100% of her build at $1.3 million. And then halfway through, he died. And so that was a totally different situation. And now she's trying to go back against the estate. And so I'll tell you, I mean, if anybody has questions, there was a lot of examples. We have a lot of documents that we prepared that we're just willing to share that are good, probably both for the homeowner and probably a little insight for the contractor about, I think, some of the things that the homeowner should be looking for and that the contractor should be providing.
Any documents, Mike, that you can share will be really appreciated.
Yeah, and I mean, we created stuff. Again, we volunteered at the FEMA Center. One of the things that started it is we were sitting next to the architect's booth, and the architects were telling people to expect in Coffey Park $500 a square foot. And so then, again, I was representing the Builders Exchange at the time. Then they come down to our booth and we're like, yeah, that's not going to happen. It'll never be that much, but it was hard to tell them what the numbers were going to be. So we started, we prepared a document on how to select an architect, because that's the same thing, how do you select an architect here, is with demolition, you're either going through FEMA or you're going through private. So we did something that explained the ins and outs of both of those. And then we really went into this, how to select a building contractor, as far as checking references and their projects, and, and then again, what to expect and contracts and everything else. So yeah, I have all those documents. We got, I got hundreds of files in my email file for the different, people that we've assisted and documents, and I'll share all those with you. So.
Excellent.
So much of this depends on how that contract is spelled out. And we do have a question in the chat about how you broke out the cost of code upgrades and how that related to how much insurance was available. I know that doing code upgrades or not doing code upgrades is a topic of concern in Superior and Marshall.
Yeah, so that was a real tricky one, and I'll tell you that we did probably 100 code upgrade breakdowns, and I can share what that standard document looks like. We probably broke it into 60 different items, from upgraded plumbing, to if you're in a WUI zone and now you're going to have tempered glass, or you're going to have gutter covers. We had somewhere, and again, we were trying to help homeowners, and so. The first questions I would ask are, what is your coverage? Because we had some people that, had minimal coverage, but then I had others that had such woeful homeowners insurance, but then had 50% in code upgrades. And so then I'm trying, again, we're not building anything for them. So we're just trying to help them get as much funds as possible. And kind of the tricky thing was, and I'd have to explain this because we, as far as I know, all of our breakdowns worked with the insurance companies. But we were very specific that we would reference, we had a big table on the bottom saying, and then a list of notes saying that this one is related to Cal Green, this one's related to Title 24, this is related to WUI, or whatever it is, and then more of an explanation. Because I would even argue that a fireplace now is a gas appliance, and technically that's an upgrade, that's a code upgrade. And so I think you should be able to get some reimbursement for that. I also felt, and we had good success with this, because a lot of times we were trying, if somebody had $200,000 in code upgrade, we would try to come in at 250 or 300. I mean, because if the insurance company balked at anything, we wanted to make sure we had a soft place to land. But I also was able to get design and engineering fees included as part of the code upgrades. Because my feeling was that if it were not for the code upgrades and the people were rebuilding their house, they should be able to use the same set of drawings they had. Therefore, if you were even using the same set of drawings, and because of the code upgrades, you would need to spend money on design and engineering. And so we were very successful with that. But there were some, the one example where they had a 50% coverage, luckily they had a long driveway. So because it was super hard to try to come up with hundreds of thousands of dollars of code upgrade for kind of a smaller residence. But guess what? Their driveway now needed fire department turnouts. They needed to have, in the county, you needed to have fire storage and a draft hydrant. So that includes ballers and this and that. So we tried to be very detailed. The other part of this that was really kind of complicated to explain to people, they said, well, I'm designing a whole new house. Can you tell me what my code upgrades are for the new house? And I said, really what you're paying for is the code upgrades for the old house. And the only way to really price that would be, because if somebody's saying, hey, I'm not going to build my old house again, the proper way to do it, I guess, from the insurance side, and Jeff can confirm this, is I would have to have that old set of drawings updated. So I'd have to have the original old drawings, I'd have to have the new old drawings with all the code upgrades, and then I'd have to price them out separately and see what the difference is. Well, that's just not going to happen. Most of these people were building something totally different. So a lot of my stuff was really just based on the age of the house. So if you see my spreadsheet, I do put something with the square footage, the numbers of bedrooms and baths, whether or not it was a single story, 2-story, the size of the garage. And then I would kind of list it. And really it's an educated guess that yes, we're going to have certain lighting controls that we didn't have based on the year of the house that it was built. And so we would establish a cost associated with that item. We'd break it out into 50 or 60 different items. Again, here on the bottom line, most insurance companies were allowing a 20% markup. So we were including a 20% markup, and that's what I would tell, let's say we were going to build their home. I'd say, hey, I'm preparing this with a 20% markup, but that's not what we would charge you. But if the insurance companies are going to allow that, we want that included in what we are anticipating the cost to be.
Yeah.
And so.
Yeah, I'd like to pivot more towards, because this is really a builder group here. And I'm just going to come from my perspective. We're signing fire families up for rebuilds now, and we have a fairly simple contract provision that says that they need to demonstrate to us, to our satisfaction, that they have the funds to pay the cost of the rebuild, of the new build. It's not even a rebuild; it's a new build, and we're kind of sorting out what we've lined up a couple of financial institutions, and I'd love to hear Alison Spitzer's experience on how setting up the escrows, et cetera, works. But it's really the question of the payment and billing process that is new to builders like my company, where we control the subdivision that we have developed the land in, and we own the property, we build it, and we just have a purchase contract. And our purchase contract also for our product, our purchasers have to demonstrate financial ability to pay. They have to have a pre-qual letter. They have to get approved by either, our mortgage company or an acceptable mortgage company, or they have to demonstrate current, liquid funds to, cover the purchase. And, that's the approach we're taking with these rebuilds. They need to provide us with a construction to perm pre-qual, if that's a gap that they need to fill with financing, or demonstrate that they've got proceeds, whether it's from insurance or otherwise, that are liquid funds available to pay the cost of the contract to build the home. So if I could get some background from those who are in the mix of it, and I'm only speaking as to our company, maybe this is too simplistic approach, but this issue has caused several of our builders to decide that they're not going to take that risk. They're going to take a pass on the fire rebuild because that is a little bit different process than they've been used to. So, with that, it's, that's my question.
Jeff, did you want to comment on that?
Yeah, just real quick, from the insurance standpoint, one of the issues that we face and that you're going to face as well is that there's no common ground as to the way which different insurance carriers distribute funds. So you could have it where some carriers, okay, so you guys are familiar with the coverages A, B, and C. Mm-hmm. Are you familiar with those? Okay, so you have some where they'll give you a check for A, they'll give you a check for B, and they'll give you a check for C. You have some where they will say, okay, we'll give you your coverage A as soon as you start construction.
What's your point?
You, when you're saying that you're referring to the insured homeowner.
Correct. Yeah. Okay. Or if one hires a builder, they'll say, we'll give it to you once construction is started. So they don't cover any of the soft costs, right? They won't give you any cash for soft costs. You have to get to the point where ground's broken, then they'll give you the first payment. And then halfway through, they'll give you the third or the second. And then upon substantial completion, which is roughly 95% completion, they'll give you the final payment. Then you get into other problems where some say, okay, here's one check for coverages A, B, and C being the additional living expenses, which could be up to 1 to 2 years all at once, and they'll just max you out. And one of the issues we found is that all of a sudden you have individuals that are controlling more liquid funds than they've ever controlled in their life. Hundreds of thousands of dollars, if not millions, because of all of these different coverages together. And so we've had ones that entered into contracts with builders in the beginning that were like, yeah, here's my proof of funding, and then went and rented a house for the next year at like $16,000 a month because they had so much money, and then bought a Corvette. And when the next bill came due, they didn't have the money. So that's one of the issues that comes with the insurance payout. And that's before you even get to Allie's position where you start on the lending. So I just want to get that out of the way quick, because there's no rhyme or reason as to which company does it. So you could have multiple ways.
So Jeff, I've got a question. And we have an expert, and Jake Harris on the call with us today too. But my question for both of you is there a way to take the insurance company on behalf of Steve, the money that the consumer gets, and place it into an escrow account that where you've created that trust with the escrow account in order to ensure that the home is going to be rebuilt?
Allie could probably speak more to this, but one of the other issues is that if you already have a mortgage on your home and you don't pay off your mortgage, whoever the mortgage holder is, that's who the check goes to.
Yeah, maybe Allie, it's a good time for you to explain some things.
Yeah, because I can't make any guarantees. Just like the insurance company can always sort of dictate the way they're going to pay out, that's also true with the lenders. So I think what we kind of saw, so a little bit about me, been in lending about over 20 years of my career. Most recently, yes, I was with an employer that had a significant amount of mortgage loans that they had done. I oversaw mortgage and construction lending at this previous place. And the mortgage, many of the people that we held mortgages with ended up losing their home in the 2017 fire. So we had a whole slew of rebuilds. Personal experience also, I am Pam's neighbor 2 doors down. So I also lost my home in the 2017 fire and had to rebuild it and kind of be faced with the other consumer end. How do I rebuild? How do I finance that? And I had the unique experience where I understand the lending side of it. Most of these homeowners do not. So many of the banks in the areas did come together and kind of look and say, what can we do to make a program that's easy? Because most of these people that didn't intend to get into the world of rebuilding their home and don't understand the financing. It's overwhelming. It's not that you just lost your home, you lost all your possessions as well. So the prospect of doing financing on top of this is just a mountain to climb here. So coming from a different, homeowners will have quite a few different avenues they can take, and every single one is going to take their own personal financial course. So some people will do exactly what you say, where the insurance proceeds are paid out. They're going to take it to the bank because the bank is listed as a lien holder, and they're going to deposit it and the lender is going to make sure that those improvements are rebuilt. And that's where you're kind of coming from a builder's perspective, that you're financing this project, you're carrying a portion until you get repaid from the bank. And that is an outflow of cash for a time while you're bridging that difference. And that process can be, if you're not prepared for it, it could be a time where you're just expecting the borrower to get, pay you because you've done the service and you're expecting in your contract a quick turnaround, but the bank has certain due diligence that has to do. Then there's also people that will pay off their mortgages, and then from the proceeds from the other buckets of insurance, such as personal property, and go get a whole new construction loan to rebuild, right? So there's a whole set of different parameters, similar, but at the same time, there's the whole set of parameters, again, waiting for the draw process to come through. And that's not 2 to 3 days. They want you to, I would say most lenders are asking you to bill once a month. And then once you bill, they're asking that you take at least 2 weeks to go through a draw process. So it sort of depends. Also, to Jeff's point, it is, the banks have to also kind of be presented with the situation of the insurance money as it comes through. So my previous employer, what we did is when people did get a check or proceeds from the dwelling, it was made out to the homeowner and to the bank. And so you could hold it in a restricted escrow, just like you were talking about, Robert. And then they would collect and draws. I would say this is up to each lender. The lender will make sort of what's their tolerance. Now, if you're working with, we were a local organization, so you could get a hold of somebody. There was quick turnarounds. We had a servicer that created some challenges, but we had the ability to take that back in-house if there was some issues or sensitivity around the cash flow needs of the contractor. But it is a process that you have to go through, and each lender is going to take a big institution like a PennyMac, or the loan's been sold elsewhere and you can't get to that lender quite as quick. They're going to have a set of separate parameters, and it may take longer than a typical turnaround with a small community bank that can kind of handle and communicate with you more frequently. So I think the concerns about your carrying the cash flow is very much valid, because it's really the bank's job to also, like you from the builder's perspective, to ensure there's sufficient funds to complete the project, that the home remains lien free during the process, and that the proceeds are used for the intended purpose. And and that we're building to the plans and specs that have been provided, because all that due diligence that's getting collected at the front by you to the builders and to the lenders is going to be the same, whether it's a rebuild with a restricted escrow or if it's a new construction loan that you're probably familiar with in some of those regards. And then each draw process is, the lien releases that are expected, the inspections that need to be done to validate the work, copies of receipts, different things that may be required to issue the payments. Will take some time, and that process, some of the struggles that I encountered was, yes, the builder, it was a smaller builder coming, wasn't used to working with a financial institution. So in their contract, they're asking to get paid rather quickly. And that was just not something that as an institution we could hurry along, right? So it caused a lot of stress and angst, and the homeowner doesn't quite understand. They sign a construction draw agreement, they know the process, but it's truly, they got the pressure from the builder saying, I need to get paid. And they do need to get paid, and it's not the intent of the bank, but it's a process to go through. I wrote some notes, but now I've gone completely tangent on that.
That's right. I mean,
But,
again, I don't want to, oh, maybe I'm on mute. No, I'm not.
No,
I
you're not.
don't want this to be just a colloquy with one builder here, but I'm just, hoping it generates other questions from the group here. Our intent is to, of course, the financial intermediary, who or whatever that may be, will have an opportunity to review our contract. That will be part of our decision, because that is a condition to our go, no-go decision. We'll have certain flexibility as to what we can agree to regarding financial processing requirements by the lender. But we've been working with lenders for 15 years, from the new construction side. And, I just trust that most institutions will be reasonable on, that draw processing provision. We have, lines of credit to cover reasonable gaps, but, really the gating element for us will be, approval of our contract or not. If the financial institution that the fire family chooses doesn't approve our contract, then, we will, have to move on, I guess, because that's just the way it is.
Yeah, and I would say that the place that I previously came through, and they were dealing with a lot of rebuilds, so they created sort of a two separate approaches. The standard, very little more rigid approach to every box needs to be checked on a true construction loan was then, somebody that paid off their mortgage and was applying for a new loan. It may be an existing fire lot that they were rebuilding their own home on, but it's still a new construction loan process. The rebuilds we did add because we saw that the homeowner was, normally you would do a significant amount of due diligence on the contractor that you're going to work with in the financing end of it. Not gave it all away, but we allowed some more latitude in who they were selecting. Still wanted to see a fixed price contract. You still wanted to advise the person to go to the local builders exchange, look at their financial, do all the things you did, but we kind of created two separate processes so that we could make sure that the objective was to get people back into their homes, right? So we needed to take an approach. That may not be true if the lender is not a local institution. It's a larger institution and they have rules. I mean, I know myself, when I got to the point where I needed to rebuild, I didn't even know where my lender was located, right? So it was easier for me to take the proceeds, my down payment, and go get a true construction loan from a community bank than it was, and I'm not touting community banks, it's just easier to communicate, but because there was a list of requirements by the contractor to build the home that they wanted paid in a certain amount of time, and there's a certain frequency to it. And I just didn't have the belief that the larger lender could do that and perform on that just based on my experience, even communicating with them to set up the restricted escrow. So I made the choice to pay it off. Every homeowner is not going to have that same option because they may have had the mortgage a long time and it's got a great rate and it's all these different things that is keeping them tied to that mortgage. Whereas I looked at it and said, okay, in the end, I'm going to end up with something similar. It's going to work out better. It'll be better process for the contractor that I've selected. And so there was a tying there. So, but as a community credit union, we were able to make sort of those rebuilds a streamlined process to create some flexibility. And I think a lot of lenders locally did that just to look at who were they banking, who did they want to help, because that was the true intent, is to get people back in their homes.
Allie, do you have the streamlined process that you can share with us?
I don't work there anymore. I have some sort of old information. I could try to construct some of it, but it was just, the normal due diligence that you would do, such as I want to see, 3 years of financials on the builder. I want to see a copy. You'd still probably get their license and different things like that, but I think it was more the financial due diligence that got kind of pared down.
Yeah.
And then the contract itself, maybe, I think in a true construction, you get all the assignment of the architecture, you get the assignments of the contract, you get all these things. So it was some of those things that got pared down so that the rebuild could go quicker.
And actually, none of that bothers me because we've been around for 16, 17 years. We've got a long track record, but it's really more the timing of processing. And for instance, you can imagine the current market for trades. The only way we keep our trades, involved with us is we pay twice a month. And there's actually a push to go to paying weekly. That doesn't work with financial institutions, but that's just what we have to do to keep our trades, aligned with us. And now with the fire rebuild, there's even increased pressure on the trades. So we certainly are going to have to, keep them happy so they'll continue to work with us so that we can get these homes rebuilt. But
and so some flexibility could be helped in the rebuild process is the insurance company. When you get the insurance check, the lender, what would typically do is they can hold all of it, or they can release what's above and beyond, so that there's, if there was so this happened often quite a lot, where we would give the proceeds back to the homeowner. They could fund it through those proceeds, but you run the risk with what Jeff was talking about, going out and buying a Corvette or something like that, where they're spending the money, but it's actually reserved for the project. So the risk could always be there. So if they're demonstrating that they've got the enough insurance funds, the bank's only going to hold, they can release the above and beyond, and then that's above and beyond their loan amount balance. And so the improvements can kind of continue to take pace. They can pay the contractor, and then the bank would sort of step back into the project. It was on a selective basis that we would do that, because it was really also a discussion with the homeowner about the risk, because he had, they sometimes would lean on the lender to say, hey, well, can you look at the bills? Can you get the inspections going? So if they chose to just take that above and beyond and pay all the way through the point that they could without the lender's involvement, and once we step in, we go and get the inspection, see how far it is, and then begin the draw process. There's some risk that lays, but it helped the contractor also get more cash up front in the beginning to get a quicker pay. And so that exposure risk is
that, there are going to be a lot of different ways in which, each lot owner client will end up having their particular financial package structured. And we're just, as a builder, we're going to have to be flexible and make a no-go decision based upon the particular circumstance of that homeowner. I anticipate with rising interest rates, there are going to be a lot of former homeowners, who want to keep their old loan if they can. But the financial institutions we've talked to, absolutely not surprising, they're going to have a first position, which means there's going to have to be a refinance and take out of the old, and you're going to be at your new market rate for your interest rate. But we'll just see where that goes.
If I can add too, I did mine a little bit differently. And I think in a previous call, we emphasized this, that I used some of the contents payout money to pay toward that first payment to my builder. So, they're going to get a chunk of a big check for contents money if they did their contents. And I used quite a bit of that as part of my budget. I didn't use it all, thankfully. But what did I do? I took out a second mortgage to finish. So I was underinsured. This is how I handled being able to cover the full contract total. I was not comfortable with signing any contract until I absolutely knew where every penny of that was going to come from. And that's what I try to impress upon everyone, because if you don't really know what your settlement is going to be from your insurance, settle those things, figure that out, so that then you can go in and and responsibly sign a financial agreement with your contractor. And so then that last payment came, it was all loan money that I paid out. So I was able to work with my local bank and have that financing set up in advance. So I knew that that was going to be something I could use.
That product was also unique, and it's something as your lenders are exploring that the lender put together at what was called, we kind of called a gap HELOC. So it was sort of you're extending almost a home equity line of credit under a home that's under construction. So up to a certain dollar amount, and you're basing it upon that contract price plus the land, sort of creating an as completed value in a sense for a small shortfall in the homeowners, so that because just like the builder is making sure that all the cash is available to pay that contract, the bank is too. It's if there's a shortfall that's due, insurance isn't guaranteed, maybe for the what was the code upgrades we were talking about, that was a line item in there, but that wasn't an absolute. And some lenders didn't pay it till the absolute end. So a lot of people would say, well, but I have this huge other line item I could get paid out, but there was no guarantee. So there was something called a gap HELOC that an institution put together that would look at the future value of the home that you're constructing and the cost it is to build, and create a product that was like a home equity line of credit. So that was kind of unique and out of the box thinking. And I think a lot of lenders in our area did that. They went and looked and said, what do we need to do to help these people get back? And
yep, that's exactly what I did. So I don't know if the banking community, are you aware if the banking community in Boulder is coming up with some coordinated products?
Yeah, this is Robert. I've been having ongoing discussions with First Bank, which is a major bank here, and a number of other ones. And we're just in the embryonic stages of really starting to pull different thoughts and processes together. But First Bank is on board, and Ted and I haven't spoken about that, or Steve, in the last couple of days. But I have the confirmation from one of the executive officers, and they're the second largest institution and one of the primary institutions that does real estate construction loans.
Yeah, and yeah, I need to talk more with you, Robert, because yeah, we're well along in conversations with them. They very, very much want to be a major player in the rebuild. First Bank, and they're the largest. In fact, they're far and away the largest remaining local institution. They're not one of the East or West Coast ones. So, and then I also understand Elevation's credit unions getting into it with so a good amount of vigor. So I think we're going to have plenty of alternatives for the fire families. The bigger issue will be what their decisions are on how they want to finance their rebuild.
Yeah, we also have in our market a number of national mortgage companies that are owned by banks, and they don't trade they may not trade as what we would know as a traditional bank in our marketplace, but they do have the construction to loan products, and those are going to be very competitive. And of course, as Steve pointed out with the credit unions and with Allie's background, it's a noted point for us as we speak to a number of the different institutions. And another quick point, Ted, I've got about 8 banks that I'm going after right now that are non-members of the association to recruit them to become members of the association so that we can introduce them as part of our professional cadre. But I think that the information that you're sharing today is extremely important. Jonathan Falk and Ted Leidy both have joined us. Ted's our executive officer, as you know, and Jonathan has been participating with us on behalf of the National Association of Home Builders as its major disaster relief critical point of contact. And we're thrilled that Jonathan's on the phone. Mike, you might, and Jonathan, prior to your coming online, Jonathan, Mike has a series of documents that may be helpful to builders all over the country and Jonathan works in every type of disaster, Mike. And if you all can exchange information, that would be great. Jonathan's email is jfalk@nahb.org. N is in national, A is in association, H is in Henry, B is in boy.
I'll put it, thank you, Ms. Robert. I'll put it in the chat for him.
Thank you.
Did you have any comments on this, Jonathan? Anything you wanted to add?
So I'm actually, I'm really interested in hearing about kind of that gap HELOC product that that Ali was speaking about earlier as kind of a novel approach to this. So if there is any information on that,
sure.
I would love to kind of learn more.
Well, and I would say that you mentioned you were talking to some banks and credit unions. Credit unions do a great job of kind of communicating with each other and sharing sort of products and things that have happened. I don't work there anymore, but I know in my past, when there was some incidents in Oregon, they were reaching out and seeing what they could do on consumer loans and how do you make advances to the population in terms of upping credit card limits and different things to get people cash in hand immediately, the products that people put. So I would say it's probably beneficial when you're talking to those credit unions to make sure that they're kind of reaching out to leading places that are in communities that have had losses like this one, like ours, and then kind of seeing what resources they put out immediately or long-term to help the community. It's great that you've got connection to the banks because the banks are going to put products together that are going to help be nimble and work with contractors and get products out. The bigger hurdle is what Steve was sort of talking on the beginning is if somebody wants to hold on to that mortgage because the rate is lower from when they had it before, it may be a national lender that's out there. And then you're kind of subject to whatever rules they require in terms of their budget or their draw process. And that's going to be the cash flow bridging of the contractors needs to do. So that's a little bit challenging. The, banks or credit unions putting together creative products to help bridge timing differences or bridge shortfalls. Those are kind of the interesting things to explore with those lenders so that they can put together similar products and that they're comfortable with from a risk standpoint.
And I'll do some follow-up to get some more information about the HELOC package because I am a member of the credit union and I'm a customer who has that. And I'll see if they can share with us. Just a quick point to add that we are coming to Boulder again, Denver and Boulder, the week of May 23, 24, 25. And this time, unfortunately, it didn't work. Jeff is not able to join our group, but we're bringing some national folks along with us, including Fannie Mae, who owns trillions of mortgages in the US. And we're bringing a representative who works in their disaster relief division and will be available to speak in a roundtable kind of discussion with that representative if you're interested in connecting or getting more information. And I will share with your group the information about that visit. We'll be doing something, I think, in Louisville on the evening of Wednesday, the 23rd. So if you have that time free. And then the following day, a tour of how the rebuild area is changing since we were there in February. And we would love to have some builders along so we can really get a clear understanding of what the challenges and opportunities are there. And we're also going to have a representative from a national organization called Tool Bank USA that helps with meeting the needs of equipment and tools in disaster areas. And they've done most of their work in wind and rain events, and they really want to reach out and help in some of these wildfire events. So find out what's possible there for the builder community as well. They're going to be along with us. But not to derail the conversation, so there may be some more questions, but I wanted to remember to mention those things here.
No, thank you very much. I definitely would like to, at least get the itinerary because,
Sure.
Yeah, I'd look forward to meeting you in person.
Oh yeah, absolutely. It'd be great. Mike Behler, did you have anything to add about what you're hearing from builders in Sonoma County and how they got paid?
Yeah, I mean, I never really heard that it was just a huge struggle, just that, like everybody's been discussing, everybody kind of had a different process. I mean, it was more, I think that from the homeowner side, they just didn't understand the lien process and stuff. And so we spent quite a bit of time helping people understand what they should be looking for as part of the billing package from the contractor, and that it was thorough, and therefore it should get approved by the lenders in a quicker manner.
Yeah, just to be aware in advance, to do some education with your client, perhaps can head off misunderstanding and stress.
Well, and
Perhaps.
again, I guess it depends on what the requirements are. Like I've told some, like we had local builders that were huge, and build a lot of subdivisions, and they're getting a house for $265 a square foot. Now, you guys, I don't know what your costs are, but back then, $265 a square foot. I said, I don't think you care what they have in there for profit or anything else. You've seen the models, you know what you're getting. Frankly, that's a great deal. You start getting up into the homes that are $500-600 a square foot or above, and you need to pay a little more attention to detail. A lot of those homeowners were probably coming a little more out of pocket. So I said, you need to be aware, that your subcontractors working on your projects are getting paid. And so those were the ones that I think needed to pay a little bit more attention to what was going on, and ask for, conditional and unconditional lien releases, and, just to be aware of what's going on your property.
Any other questions?
Jake, do you have some comments that you'd like to share?
I see both sides. I'm with Build Wallet. Build Wallet is a startup. It is a fintech platform that basically bridges the gap between these two spots. We've spent the last year up at the National Private Lenders Association, being on the best practices committee, gaining an understanding of what the lending practices need to be in order to reduce the risk associated with a platform that does what we do. But I have a 14-year background as a commercial and residential contractor. So I completely understand, and I consider myself a long-term student of cash flow. So there's a couple of things that have come out recently that have changed the game for what this problem is. Specifically, there was a regulation change in 2019 that allowed banks to hold funds on deposit and tokenize them into technology platforms like the one that we've built. So there are more and more technologies, financial technology platforms, that are moving US dollars between parties safely and securely, and reducing risk. We've taken a stab at it and created a platform that probably the reason why I'm here, that alleviates a lot of these concerns and issues that I've been listening between the breakdown, the expectations, the best of intentions, escrow, trust, all those different things. We've taken a stab and tried to fix, and we've spent the last year releasing our product and basically combining and connecting the lenders and the capital sources to all the way down to the final mile providers. Meanwhile, making sure that everybody is in the chain. So this platform is actually built on blockchain. So one of the things that Steve said was getting the subcontractors paid in record time, all the way down to, what was it, I think every 2 weeks. Well, on blockchain, it's 12 seconds. So there's a lot of advantage that can be done. And I think it's a great opportunity to look at technology, financial technology, to take this to the next level. And especially on a large scale application, we found most readily that process becomes even more important when you're dealing with a situation like this, especially with high dollars and not buying a Corvette and a couple of other points that were brought up here. But process gets thrown out the window when people start making progress. And what financial technology does is it prevents you from basically throwing your process out the window just because you're making progress. And a lot of times in process, you're only good as your weakest link, and your weakest link may be the site supervisor or the guy in the field. But if you have a technology platform that's hard coded into this process, you're required to execute as intended. So Build Wallet is exactly what it sounds like. It's an isolated account specifically for the project itself. It's funded, and then the contractor works through those funds so that there is no delay. There is no concern, no issue. Meanwhile, the lending party, the owner, all of those people have the confidence that the funds that they are escrowing and putting up for that project go to that project. So again, it's risk reduction while you have increased performance without more paperwork or overhead.
Do you have to get agreements from who has to agree to use Build Wallet? Who are the people, the organization?
So we connect everybody, so basically the way that this works, again, back to that 2019, everybody signs on and gets a digital wallet from the lender all the way down to the laborer. And then we wrote a financial technology platform based on our understanding and our the way that we set up contracts, subcontracts, smart contracts, change orders. And it's basically, I mean, you can go to the Google Play Store or Apple iStore and download it today. We don't go through the ERP technology. We have projects on it right now that are homeowners renovating their kitchen. And I just signed a multi-million-dollar build for an infrastructure platform. It doesn't matter. It's all the same principles. You establish a budget, you fund that budget, you fund that build wallet, and then the contractor executes subcontracts and then approves and payments are released. So we took a very simple stab at what is a very complex problem in our space.
So I have a quick question. I tried to go through your site a little bit when we were notified of it. So you charge, I believe, a 3% fee. So let's say somebody like Steve, who's the general contractor, would all of his payments be subjected to that 3% fee, and none of the sub tiers, like if a subcontractor was paying somebody, it wouldn't fall into that. So I mean, this would basically add 3% to a project's cost or be factored in. Is that how it works?
No, that's incorrect. So the way that this works is that, and COVID did us a solid favor here. The opportunity was that COVID advanced subcontractors, A, engaging in technology, but then B, also receiving payments digitally. So if they're invoicing with QuickBooks, Clover, Cash App, Fast App, Zelle, any of these platforms, a B2B payment requires them to receive less than they billed, typically anywhere from 2.2 to 3.5%. So as the money, as an example, if a subcontractor, a tile contractor invoiced $1,000, upon contractor approval and payment, that subcontractor receives $970 into their digital wallet, and then they push a button and it extracts to their personal bank account the next day. So contractors are not seeing an increase in cost if the subcontractors are used to taking their payments digitally.
So in Steve's case, he wouldn't be receiving the funds and then paying the subcontractor. The subcontractor would be paid directly.
There's no double ding, correct?
No, but I'm just saying that as far as processing the payments, you're saying the payment goes directly to the subcontractor. Okay.
Now we've set up, I know the builders in the room will have questions. We've set up restrictions and visibilities to make sure that the subcontractor can buy down that work if they will, and we protect that margin because that's part of the business model.
I will definitely take a look at your website. I gotta process it. My subcontractors are, I struggle to get an insurance OSIP credit from them of 1.5%, but we'll see what we can do.
Well, if they can use Facebook, they can use our app, and there are other builders out there that are charging as much as 10% to receive payments in short order. This, upon approval, their money is there in 12 seconds. That's the beauty of blockchain.
Steve, excuse me, Jake can be reached right now at 919-985-3032.
I'll put my contact information.
985-3032.
Yeah, and actually, I think I do have your email, so that'd be good.
Great.
We're all for innovation. I think with each disaster, we learn things and we find new ways to work through the roadblocks. And so thank you for bringing that innovative approach. We'll all want to take a look at it and see how that works. And I will follow up. It's the top of the hour. I just want to be respectful of people's time and invite more discussion. If you have more questions, we are always happy to look for people to help find those resources and share their experience. And we'll be back in Colorado in just 1 month.
Yeah.
And I look forward to maybe meeting some of you when we do visit at that time. Thank you all so much for being here. Thanks to our guests, Allie and Mike and Jeff, for being here again and volunteering your time. I really appreciate it. And all the best to you as that debris removal is fast underway now. Thank
It is.
goodness.
Yeah. Thanks very much.
Okay.
Thank you all. Have a great
Thank
day.
Yeah.
Thanks, everybody.
Bye now.
Thank you.